Welcome back to the Money and Wealth Show. I'm Sterling Fox, in conversation this week with Victor Adair, who is a former portfolio manager, still a very active trader, at least on his own behalf, as well as being a frequent financial commentator in British Columbia. And Victor, you talked a little earlier about the Governor of the Bank of Canada, Mark Carney, and some of the warnings he's been giving us in the past few weeks. Not the least of which, and you've already alluded to this in the conversation, is the record high levels of personal debt Canadians are carrying these days. Apparently, on average, we each owe about $1.50 for every dollar we bring in. This is not a happy scenario at all, and I suppose it shouldn't be any surprise that the head of the Bank of Canada is going, this can't go on.
Well, we do have a record level of debt, that is the public across the country. And that's not a problem until it's a problem, and then it's really a problem.
Right.
And I remember reflecting on this at one point. I thought, we've got all this debt getting built up, but at the same time, you look at the other side of the balance sheet, the asset prices are higher than they've ever been, and this is principally, the housing market. So long as housing prices stay strong, then maybe having this high level of debt isn't a problem, unless something else creeps in there. For instance, something that happens outside of Canada. For instance, China, for some reason or other, has a smaller appetite for commodities, or the market thinks maybe they will have a smaller appetite for commodities, and then there's some pressure brought upon the commodity exporters. I think the bank, any central bank, is always going to be trying to anticipate possible problems. And when you've got things that are maybe at an extreme relative to where they've been, that sets up a problem. The domestic vulnerability is, what if, for some reason, housing prices start to fall? Just a couple of years ago in the United States, housing markets had really ramped up. They had progressed along for decades at a certain level and then really ramped up at the end. We have a somewhat similar pattern in Canada. Maybe it will just be something as simple as the demographic change in our country. As more and more people get a little older and they maybe want to sell the big house and move into a condo.
Sure.
Maybe that's enough. I don't know, you try to anticipate what could derail a perfect scenario. Could be any number of things, and as a trader in the markets that I participated in over the years, it can from time to time just be something out of left field that you weren't even thinking about.
I suppose what Mr. Carney's remarks, the ones that captured my attention the most, in addition to talking about these high levels, record high levels of personal debt, he also specifically referenced the Canadian real estate sector. He talked about the likelihood of, his word, a correction occurring in the real estate sector in this country. And we know that there are markets like Vancouver, Victoria, or Toronto, Calgary, another one, where prices are quite a bit higher than reality would suggest, I think, is a kind way of putting it. And there are some corrections already taking place. Mm-hmm. How do you see that shaking out as we get through this final quarter of 2010? Because some people are forecasting 2011 on the real estate side to be a pretty lean year, Victor.
I couldn't really give you a real estate forecast.
Okay.
I think my track record on forecasting real estate's lousy. I have felt that our real estate markets here were extraordinarily richly priced for years.
Right.
And they've sustained that level. So I just shake my head. When I listen to what the Governor of the Bank of Canada says, he's obviously looking at this could become a problem, and let's maybe head it off at the pass. I don't want to be a buyer, but obviously we've got a particular set of circumstances. Maybe it's massive immigration that changes it. It's a different market than it is in Las Vegas, where prices are down 50%.
Yes, yeah.
But never say never. Prices are high, and it could be something domestic, could be something from outside the country. I would be, for myself, I would be cautious about being a buyer.
Well, I think if you could extrapolate from what Mr. Carney said in
he
the last
probably
couple of
would
weeks,
be too.
He'd agree with you,
Yeah.
and he'd say perhaps this isn't the right time to make any moves in the real estate game. Just let it settle a little bit and let it come to you, perhaps.
Yeah, I don't know that he sees himself as trying to be
an advisor.
Yeah,
Right,
exactly.
Right.
But at the same time, his job at the Bank of Canada, he may feel as though there's some responsibility to to alert people to that problem.
Well, I think, and you know, their primary concern is always inflation.
Here's where it's a problem, and it's the leverage. And leverage was what got the states into the problem, and leverage is what got the Greeks into the problem, and around you go. Money, you know, interest rates have declined for most of our adult lifetime, since the very early 1980s.
That's right.
And as interest rates came down relative to what we were used to, and asset prices went up, it was a no-brainer to borrow and buy. Right. And the buy went up and the cost of money went down. You know, you're like a double whammy. That was a painful lesson learned when the bubble popped, as it were. And you know, I don't know that that is over and done and dead. You know, I think that's maybe what the governor was pointing at. You've got a very highly levered real estate market that is a big part of the asset side of the balance sheet for Canadians here. We're at the highest level of debt in our lifetimes when interest rates are the lowest they've been in our lifetimes. If things start to shift the other way, it could be painful for people that are carrying too much leverage. And I think that's his message, and I would certainly concur.
Now, as a longtime trader and portfolio manager, we've only got a minute here, but I wanted to save this until the very last, and that's bonds. Mm-hmm. Canadians are notoriously conservative investors. We look for safe, secure investments. We've been big fans of bonds for decades. Mm-hmm. Bonds have suddenly fallen out of favor. Or have they, as much as perhaps some people seem to think they have?
Bonds could be a real key part of anybody's portfolio. You got some bonds, you got some stocks, you got some real estate. Sure. That's sort of an asset diversification. Bill Gross, who runs the biggest bond fund in the world, is on record recently as saying the 30-year bull market in bonds is over. If the market begins to think that the authorities around the world, that's the central banks, are going to fund the massive deficit programs that the governments are running, then sooner or later the bond vigilantes start to come out again and we start pushing up interest rates. And in an environment where people have got a lot of money borrowed, getting interest rates pushed higher is going to set us up for a whole other wealth of problems.
As if 2010 hasn't been an interesting enough year, 2011 is looking even, well, shall we say, more entertaining. Nobody's going to fall asleep at the switch next year either, Victor, are they?
I hope not.
Thanks for coming to see us again. We appreciate your return visit to the show. Always good to have you come by.
Thank you.
We'll be right back.
Hi, I'm Larry Ray, Chairman and CEO of Molycorp Gold Corp. Our major project in Nevada is magnesium. We have a 43101 resource of 52 billion pounds at $1.30 a pound. Do the math. Go to our website at molycorp.com or phone me direct at 604-531-9639.
Tax Tips with David Ingram.
You're a school teacher, you've been laid off. Well, maybe this is a chance to explore your horizons. If you get an H-1B visa for the States or a TN visa, depending on what you're teaching, you can go work all over the States except for Hawaii. So here's what you do. You apply to the California School Board, you apply to the Georgia School Board. They want you, they hire you, they get you the H-1B. If you're teaching post-secondary, it's only a one-day process. As long as it's post-secondary, they can get you a treaty NAFTA visa and you can be working tomorrow. Now remember, if you as a teacher or any other occupation is going to go to work in the States, you have to file a Departing Canada tax return with a form called a T1161. Minimum penalty for not filing that form is $2,500, and you have to file a tax return, a dual status tax return for arriving in the United States. So it's really important. Explore your horizons, but get your tax returns done correctly. That's a tax tip.
And that's our program for this week. Our thanks to David Ingram and to our special guest, Victor Adair. And thank you for joining us. If you have some thoughts about our show, we'd love to hear them. Send us an email to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.
Comments made on the preceding paid commercial program are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time.